Warren Buffett has been pondering inflation for a very long time. Biographers claim that throughout his career as an investor, the famed 91-year-old investor received numerous lectures on the dangers of inflation from his Republican congressman father. Consumer prices increased 7.9% over the prior year in February 2022, which was the greatest inflation rate in 40 years. Prices for both new and second-hand cars rose by close to 40%. We will discuss ways to generate money during inflation in today's video. Do not forget to follow our channel. Let's start. Last year, Buffett said at the Berkshire Hathaway annual meeting, "We are seeing extremely significant inflation. We are raising prices and others are doing the same for us, and people are accepting it." Why then do investors worry about inflation so much? Because inflation is a universal cost increase, your purchasing power eventually falls. What initially appears to be a favorable return for investors may actually turn out to be negative if inflation increases enough. In spite of the fact that buying a bond paying 5% interest annually could appear like a smart investment, if inflation increases to 6%, your real return turns negative. It is worth reviewing some of Buffett's best advice for fending off what he once described to as a gigantic corporate parasite as prices continue to rise sharply. Buffett has always backed holding businesses that offer substantial returns on the capital invested in the business. Businesses that have low capital requirements and can maintain their profitability should do better during inflationary times than those that must continually increase their investments at ever-rising costs in order to maintain their position. Recently, Buffett equated fighting inflation to running up a down escalator. He suggested looking for companies that might increase prices when inflation is higher. Buffett stated to the Financial Crisis Inquiry Commission that the pricing power of a company is the single most critical factor in appraising a corporation. You have the ability to raise prices without risking losing customers to a rival, and your firm is doing quite well. If a corporation can raise prices during periods of high inflation, it has a substantial advantage since it can balance its rising costs. In Buffett's opinion, an unrestricted toll bridge would be the finest investment to hold during an inflationary period because it could have already been constructed and its cost could have been increased to offset inflation. "You don't need to constantly replacing the bridge because you built it with old money," he remarked. Buffett reminded investors that investing in their abilities is one of the simplest ways to maintain their purchasing power over time. A city's or town's top doctor or lawyer benefits from an education that was paid for with old dollars, yet they are free to bill their clients with today's money without having to undergo additional training. By enrolling in a local college or using online resources, you might want to think about adding a new skill to your resume. Higher education can be expensive, but in the long run, it can increase your knowledge and make you a valued employee. As you gain more worth to your company and its clientele over time, you'll be able to demand your due part of revenues. In his 2020 letter to Berkshire's shareholders, Buffett stated that bonds are not the place to be these days. Bond investors could suffer severely in an inflationary climate because interest rates are still relatively low. According to Buffett, purchasing a 10-year bond with a yield of 2% is akin to paying 50 times earnings for a company, with the critical caveat that the bond's earnings are fixed. Whether they are pension funds, insurance firms, or retirees, fixed income investors around the world face a grim future, he added. Everyone would feel quite well, save the ones involved in goods denominated in dollars, if we dumped $1 million in cash into every household in the United States today. Warren Buffett, he asserts that the worst thing you can do in an inflationary environment is to hold a currency whose value is being eroded by an excessive supply of that currency. Savings, bonds, and money market accounts that pay little or no interest suffer from the loss of purchasing power. Due of this, Buffett invests money that has been on the sidelines during periods of inflation. Buffett changes portfolio acquisitions while adhering to his long-term value investment philosophy by looking at the pace and tendencies of present inflation rather than attempting to predict future inflation. Unfortunately, most businesses will struggle to survive inflation in real terms. Their income may increase somewhat over time, but they must continually invest more money into the company in order to maintain their position. You are aware that the worst form of business is one that constantly requires you to put more money on the table while not increasing your earnings. Richard Buffett. Businesses with low returns on tangible assets, in Buffett's opinion, suffer with return on equity since they must repeatedly reinvest their profits back into the business and find it difficult to raise money for growth and equipment upgrades. These companies must invest a sizable amount of money up front in order to operate, making them initially capital intensive and reliant on suppliers for pricing at the start of the production cycle. Avoid making investments in companies that cannot raise their prices to cover their rising labor and production costs. Even though a company's price and sales remain constant, its profit margin will decline and it will experience a decline in overall profitability in dollars if it can only increase pricing with customers if it experiences a decline in volume and sales. Businesses who are unable to pass on cost inflation to customers run the risk of going out of business if they lack the cash or credit to do so when their earnings start to decline. I'll say this regarding gold. If all the gold in the world were combined, it would nearly equal a cube measuring 67 feet on each side. Now, that same cube of gold would be worth around $7 trillion at today's market values, which is roughly a third of the value of all American equities. $7 trillion. You could own all of the cropland in the United States, roughly 7 Exxon Mobils, and $1 trillion in cash on hand. And you know, I'd constantly touch and fondle a 67-foot cube of gold if you gave me the option of staring at it for the entire day. If you think I'm crazy, I'll take the farms and the Exxon Mobils. Richard Buffett. As a hedge against a weakening currency, non-productive assets like gold, works of art, and real estate can maintain their value during inflation. However, these assets don't provide cash flow or have any other forms of economic value. Buffett favors holding shares of businesses that produce commodities like gold and oil as a buffer against a recession. He also bought fields when he was young that he owned and produced a harvest every year. As evidenced by his most recent acquisitions of gold mining and oil enterprises, he favors investing in cash-flowing assets over all other asset classes, particularly during inflationary times. Warren asserts that you can invest in companies with little startup money and high capital returns. Well-known companies with high profit margins that don't need funding, like Coca-Cola and See's Candy, which Buffett owns. Furthermore, successful software companies like Microsoft can digitally scale their products while keeping minimal operating expenses. By making investments in companies with pricing power, you can raise prices to keep up with inflation without worrying about losing customers or revenue. They offer a good or service that people will always need or demand, regardless of price. You can also invest in companies that have little to no immediate financial requirements, regularly add to their capital stock, and have room for leverage on their balance sheets. They have a lot of cash, little debt, and strong cash flow. Apple is one of these businesses. Whether the present inflation spike will end or start to drop is still impossible to forecast. If you're concerned about rising inflation, you might take Warren Buffett's suggestion and invest in useful assets instead of low-yielding bonds whose dividends don't keep up with inflation, such as high-quality corporations with reasonable capital requirements.